Chinese electric vehicle maker BYD says half-year profits have more than tripled to record-breaking deliveries. The company posted net earnings of $1.5 billion for January to June, despite fierce competition, which included a price war with US rivals. BYD announced it would buy the China-based units of US manufacturing firm Jabil for just over $2 billion. Well, let's talk now to Tu Le, who's the managing director of business intelligence firm Sino Auto Insights. Good to have you with us on the programme. So, first half profits for BYD up 200%, more than tripling, and record numbers of deliveries. These look like very good numbers.
They do, and in the midst of a price war in China, and to your previous segment, pointing back to your previous segment, some struggles in the economy. So I look for BYD to continue to be strong. Right now, it's Tesla, BYD, and everyone else in the China market.
Well, let's talk about that price war you mentioned in the electric vehicle market. What's that doing to revenue for BYD and also to competition in the sector?
So with BYD, because they're vertically integrated, they have a lot more control over their costs than the typical EV startup in China, along with Tesla. And so what we're seeing is likely in 6-12 months ago, they had initially planned to price brand new vehicles at X price. And they're looking at the market and they're probably sharpening their pencil before they launch these new vehicles. So it's almost a price cut pre-launch of the vehicle. And that's what's really forcing the other EV makers to cut prices, along with Tesla pushing the market down. And I see that continuing throughout the rest of 2023 because of what's going on in the overall economy in China as well.
So BYD also announcing that it's bought part of the US company Jabil's business. What's behind that?
So BYD is multifaceted, and I think this is just a reminder that they not only dominate the EV sector in China and likely in the world in the next few years, but they started their company in the consumer products and electronics sector. And their BYD Electronics was IPO'd in Hong Kong in 2007. They've been doing business selling memory, selling batteries to consumer electronics companies for quite some time. So I look at this as continuing to vertically integrate outside of the EV sector, but also perhaps BYD as a company seeing convergence between some of the electronics and the EV. So this could be a very strategic move for them.
And BYD is also diversifying within the EV market, isn't it? Both in terms of the price range of the vehicles it's selling and the markets it's working in. Given it's been so successful in these latest numbers, why is it looking to change things?
I don't think they're looking to change. I think they're looking at evolving because they control most of the mass market segment. Let's say 300,000 RMB and below in China. That's about 45,000 US dollars. They've launched 3 new brands, well, 2 new brands, along with a joint venture Denza that they had with Mercedes, and they've virtually bought Mercedes out of that. And so what we're seeing is BYD be much more aggressive across different price segments with products. And so there's also Fengcheng Bao, which is priced above the Denza, and then Yangwang, which is now a premium brand. And so their product portfolio really complements the original BYD brand. And I see that as an opportunity to not only sell at the mass market around the world, because BYD, the EV brand, currently sells in over 55 countries. And so I see this as an opportunity to not only compete with the Porsches and the Audis in the domestic market, but also exporting and competing with the premium brands outside of China.
Tu Le from Sino Auto Insights, good to talk to you today. Thank you for joining us.